GCSE Business Studies. Okay.
Right.
So just give me 2 minutes and just join in. Okay. Give me a quick revision and overview of what we did in the last class. Do you remember what we did in the last business class?
Miss, I just need to go back my notes because I can do it in a different room. Just give me a minute.
Sure.
Miss, last time I think we did the marketing mix product.
Mm-hmm.
So
What is it that you understood in the marketing mix?
we learned the role of product there, the types of products, the life cycle of it, and then
Okay.
we also learned the role of packaging.
Yes.
And I think you taught me also like unique selling points.
Yes.
And
What are the 4 types of products?
there was consumer goods, producer goods, consumer services, and producer services.
Okay. Okay. Great. Give me an example of each one of them.
For consumer good, there was like foods and like shelter, I think, or clothing. And then for consumer services, there was education and healthcare.
Okay.
For producer service goods was
Okay.
was machinery, and for producer services was like so was healthcare under services or consumer services?
What does?
Miss, for healthcare, does that come under producer or consumer services?
Consumer service, producer, sorry, consumer services. It's a direct service, right? The people,
Yeah.
customers are directly using it.
Okay.
So an example of a producer service then?
Yes, I don't remember for that one.
Think about what kind of services do to businesses you might use. Think of any business and think about what service they could have used. Insurance?
Miss, doesn't it come under like consumer service too, or no?
What is?
Insurance. Doesn't that also come under consumer service?
Yes. Yep.
Also can come under both?
Yes, it can. So
Oh,
can a bank,
okay.
right?
Yeah.
Freight forwarding. Do you know what freight forwarding is?
No.
Big delivery trucks delivering products from one place to other.
Okay, yeah.
Yeah. Consumer or some producer?
Producer, I think.
Producer service. Okay, great. Okay, let's start with our new chapter. Okay. So business objectives. There we are. Business objectives and stakeholder objectives. Okay. Why? What are objectives? First thing, what are objectives? What are your objectives? What are your personal objectives? What is it that you want to achieve? What are your goals in life?
Just like a stable job or like high study standards, I think. Like that.
Okay. Okay. So your goal is to have a stable job. Let's have a look at this. So we've got an objective here. Okay. Emily's objectives. Okay. Abbas, are you in?
Yeah, I'm here.
Oh, hey. Should have said hi.
Sorry.
Did you just come in?
Yeah, I just came in a few seconds ago.
All right. Okay. So we're doing business objectives and stakeholder objectives right
Okay.
now. Okay. So
Okay.
you need to have a notebook with you, and everything that I tell you to write, you have to write it. Right now, I'm just explaining what objectives are. Okay.
Okay. Okay.
Okay. So objectives, let's say, Emily, you have an objective or an aim or a goal of getting a stable job, right? In the future, you want to have a stable job, right? What about you, boss? What is your goal in life?
Um, to be a millionaire. Let's
All
keep it
right.
going.
All right. To be rich. Let's talk about what business objectives I'll give you. You figure out, okay? Business objectives need to be smart. I'll tell you what and why this came up. It really relates to this. So Emily wants a stable job and you want to be rich. You two, both of you right now, what your strategy right now is, how are you going to achieve this goal? What is your strategy? You both of you are in a process of it. Your strategy
Oh,
is to study,
yeah.
right? To gain experience,
Yeah.
right, Emily? You with
Yeah.
me?
Yes,
Okay.
miss.
So your objective is to achieve so and so, and you both of you have a strategy to achieve those objectives, right? This is how businesses have their own objectives, and then they plan out their strategies and make plans. They pull out here their resources, like your parents have pulled out their money, which is the resource in this aspect, to achieve and implement that strategy so that the objectives could be met, right?
Yeah.
Okay. So business objectives, this is what I want you guys to write. Okay.
Okay.
I want you to write a definition. I'll just share that with you. 1 second. Here. Business objectives are the aims and or targets that a business are the aims or targets that a business works towards. Can you quickly write this down? Just let me know when you're done.
Yeah, I'm done.
Okay.
And then also,
All right. So business objectives, they need to be smart. That is the basic criteria of a business objective. Specific. So it needs to be specific. For instance, um, Emily didn't just want a job, she wanted a stable job, right? The fact that she wrote she wants a stable job specifies that she wants to have, a stable job. She doesn't want to be having a freelancing job or a job that she's going to do for a little while or internship. Specifically, she could talk about having a fashion designing job, right? So your smart objectives must be specific. They must be measurable, which means by the end of the year, which year do you want to have your stable job, and or by when do you want to be a millionaire? Both of you, give me a year. Give me a year.
20, 2033.
5,
2033. Fine. What about you, Emily?
25, or no,
2020. Okay.
23 is also fine. Sorry,
2025.
not 33, sorry.
Okay. 33. Both of you. We are specific. We are measurable. By the year 2033, we will be, I'll have a stable job and I'll be a millionaire. Okay. They must be achievable. You can't wish for the star because you can't really go there, right? So you have to have achievable objectives and realistic objectives. Can you really be a millionaire by 2033, Abbas?
Why not?
Okay, don't forget me when you become a millionaire. When
I'll remember
your
you.
objectives when your objectives need to be realistic. You can't be a small business. You can't be a small shack business and expect yourself to be have 20,000 restaurant branches in the city within 2 years. Is that realistic?
Unless you have me as a CEO.
Okay. All right. But in reality,
Yeah,
you can't
no,
really have a small shack and have 20,000 branches in 2 years, can you? So it's not
no.
a realistic objective, right? Your objectives need to be time specific, like you people specified that by the year 2033, I'll achieve these objectives. So this is what your targets need to be, okay? So they need to be smart. What are the advantages of having these objectives? They motivate people. Once you've achieved your target, it really gives you a boost that, hey, this is what I wanted and I got it. I worked hard for it. And you'll be encouraged to do more of it in the future, right? So motivates people. It helps in the decision making and it keeps you focused on. For instance, you have a goal of having a stable job. So you'll remain focused and you'll work really hard in school and get an A so that you can finally, get a good job and then finally grow in that job, right? So having objectives gives you an idea of planning a strategy and remain focused on your goal, right? So you wouldn't start partying and go here and there. You know that you have to work hard and get an A and do well in school and high school, in university, so that you can have a solid job. So you will be in the right direction and be focused. Clear? Are we
Yes,
clear
sir.
so far?
Yeah,
So this is advantage one, employees remain motivated. Advantage two, it allows the business or the managers to remain focused on the objectives and plan a strategy according to it. And the third advantage is that the business can compare performance. So in the year 2019, we made $30,000 profit, but in the year 2023, we made $80,000 profit. Were we able to achieve our objectives in 2019? Yes. Were we able to achieve our objectives in 2023? No. We're just making a comparison from previous years onto how we've adopted this strategy to achieve the objectives, on how we worked on it, what were we able to achieve the targets, and what we need to do to improve in the next coming years in order to become successful and achieve our objectives in the future. All right. So managers use the previous objectives to compare their performances with their previous years. Okay. And even with the competitors, by the way, we see if the competitors are doing better than us, if they've achieved their objectives, to see their objectives and everything. All right. Clear?
Yeah.
I want you to write
Yeah.
these three advantages of setting objectives. I want you to write SMART. And once you're done with that, let me know. Then I'll talk about the different objectives businesses can have.
Okay, so are those three like the 1, 2, 3, 4, the bullet points?
Yes.
Okay.
Write them in your own words, whatever is better for your understanding.
Yes, I'm
I'm
done.
done.
Great. All right. Clear so far?
Yeah.
Okay. Let me just quickly have a look at this. All right. Moving on to the different kind of business objectives businesses have. Let's have a look at this. When a new business starts up, it's new. It's obviously made in a lot of investments, and they're obviously in the market. There's a lot of competition. They've got new employees, new ideas, new product, or even an existing product, but they're a new brand. For that kind of a business, what do you think would they aim for?
Their survival.
Survival. So, a business objectives, especially for businesses which are startups, we've got survival as an objective. Okay. Now, think about the pandemic. Large, huge businesses or suffered a lot, that to be shut down. Or at that point, a lot of profitable businesses, if for instance you're a restaurant and the pandemic hits, you were profitable, but what is your objective now?
To keep on
Hello.
earning profit.
Survival again, right?
Yeah.
Because the pandemic is hit and you're a restaurant, and not a lot of people are coming to the restaurant, or there's a curfew and you can't really go outside, and you can't really go to a restaurant, so your business is pretty much shut down now, right? So what happens? You go back to survival. You just want to survive right now, even in this economic crash, or in this market, or in the pandemic. You want to survive in the market, right? So your businesses, in for instance, in situations like the pandemic, in situations like economic crisis, um, in the country, inflation, recession, those situations, businesses usually get an impact, or get affected by the external environment. And eventually, their objectives, it's not necessary. What I'm trying to say is that it's not mandatory for a business just to be a startup or a new business for it to have survival as an objective. Okay. You can have survival as an objective even if you're a large established business. You can still get affected by the external environment, because the environment is so dynamic. It keeps changing, the trends change, the economic environment change, the taste of people change, their choices change, and eventually they crash. Do you guys know a Blackberry, a
Yeah.
phone? Blackberry? Yeah,
Yeah.
ever used it, ever had one?
No.
In the year 2010, BlackBerry was like a big thing, crazy.
Yeah.
Everybody was going crazy over BBM, and it was like the new trend. If you don't have a BlackBerry, you're not part of a circle. That's how it was. Okay, that's how it was in year 2010. But what happened now? Where are the phones today? They're not even there in the market, right?
Yeah. Decline.
Right? They're
Yeah.
gone. Why do you think that is, Emily? Why are they not in the market anymore? We've talked about this. Why are the BlackBerry phones not in the market anymore?
Miss, is it related to the product life cycle thing?
Mm, could be anything. Tell me. Whatever it is, give me an answer.
Is it because like it's been in the market for a long time and then like it finally reaches like decline stage?
Okay,
Maybe like
it
meeting
went
like
to a decline stage, okay, in the product life cycle. But why do you think it declined? Why does an iPhone not decline? Why does a Samsung phone not decline? And any of you can answer. Why does an
Consumer
iPhone
taste
or
have
a
changed.
Samsung phone does not decline? Why did a BlackBerry decline? Yes, Abbas.
Consumer tastes have changed, so they like the more they like the operating system of an iOS. It looks more nice, more comfortable to use. So their
Change of
taste change.
taste,
Yeah,
trend, technological change, technological development.
yeah,
Why does an
definitely.
iPhone launch a new phone every year? Because they update every year. They bring in, even though there's not a lot of noticeable changes in their phones every year, but they bring out a new phone every year because they want to create that illusion in your mind that, hey, this is a new phone. It's new, right? BlackBerry did not even change. What it was a button phone. It had a keyboard like a laptop keyboard, kind of a keyboard,
Yeah,
and it wasn't a user friendly phone. It was mostly used for professionals or business professionals, right? So eventually the BBM hype declined, as Emily said, and they did not bring in new changes to adapt to the new changes in the market. They didn't bring changes, so the business went down to a failure. So at that point, when they were struggling, their objective from profit went to survival because they wanted to survive the market, but they didn't survive because they didn't adapt to the changes in the market. Do you get it?
Yeah.
yeah.
Right? So survival is one of the objectives of it. Could be an objective of a brand new startup, new business, or it could be of a business which is struggling in the market and it's getting affected due to the external factors. Okay, so we have to remember that the external factors can always affect the business success, and it can add to the idea of the business struggling and leading to survival. Again, profit, profit maximization, a very important business objective. Everybody wants to make a profit, but not all businesses aim to maximize their profit, by the way. Okay, so profit maximization simply means they want to keep on increasing their profit. So knowing that you have to make a smart objective, so the smart objective in this situation would be, give you an example here, increase 25% of profit by the end of 2018. That's your business objective. Smart, measurable. How is it measurable?
It's here, so 2018 or
Nope.
25%.
25% is the measurable part. Time specific is 2018, right? Specific, we want profit. We want to increase the profit, right? These are your smart objectives example. Got it? Profit
Yeah.
maximization right here. Then comes then comes your next business objective, which is shareholders value. Okay, so you want to, when do we have shareholders? What businesses have shareholders? Emily, which businesses have shareholders?
There's still limited companies, private limited.
Mm-hmm. Mm-hmm. Limited companies. Do you know the difference between private and public limited company, Abbas?
Yeah, public
What
goods
is the
and public goods,
difference?
right?
What is the difference?
So, public goods are goods there is access to everybody, which is non-rivalrous and non-competitive, while
Can
private
you
goods.
speak louder and say it again?
Oh, sorry. So, public goods are goods which are what do you call it? Public goods are goods which are non-rivalrous
Mm-hmm.
and have access to everybody.
Mm-hmm.
While private goods are the opposite.
Okay, I'm talking about private limited company and public limited company, not the private goods. Do you know the difference?
Okay, maybe you can explain. Yeah, I'm not sure that.
Okay, Emily, what is the difference between private and public limited company?
Isn't the private limited can like sell their shells to the it's only like their friends and family, and then public
Mm-hmm.
can share their, they can sell their shares to the general public.
Yes, absolutely. Okay, Abbas, I'm going to show you something here. You
Okay.
need to know the difference here. 1 second. Business growth, partnership, types of legal structures. I think it, okay. Remember, there are two types of business organizations always, private sector and public sector. Okay, remember this. The
Yeah.
one that you talked about are private sectors and public sector. Public sector is owned, controlled, and run by the government. For example, hospitals, schools, bus services that are owned by the state, that they run, that is
Yeah.
accessible to everybody. But in a private sector, these are run by private individuals. We're not part of the government. So somebody like you and me running a business, that's a private sector business, right? There are
Mhm.
different types of legal structures or the shapes that these private sector businesses can take. It could be a sole trader. A sole trader is somebody who runs the business on his own. For example, you are running a business on your own, right? That's a sole trader. Okay. That sole trader
Okay.
also falls into the private sector. Partnership. You and I running the business together. 50-50 partnership. We're partners. That's partnership. That's also part of the private sector. Okay. Then
Okay.
comes limited companies. There are two types of limited companies. These limited companies, these companies are basically those companies that have shareholders. You know what a shareholder is?
Yeah.
Shareholders are the investors in your company. They invest money in your company and they get a little percentage of profit in
Dividend.
return. They get a percentage of profit and ownership. Okay. So what happens in a limited company, in a private limited company, you cannot sell your shares in the market. You can't promote your shares in the market or sell them. You can only sell them to your employees,
Okay.
people you know, your friends, your family, only the people you know. Okay. So you can't advertise or promote your shares in the stock market.
Oh,
Okay.
okay. Yeah.
Okay. But a public limited company can do that. They can sell and they can promote in the stock market. Okay.
Okay. So, for example, Apple, Microsoft.
Yes, absolutely. Yes. Both of them are part of the private sector. Public limited company is not in the public sector.
Yeah.
Okay.
Yeah.
So you need to know that difference. So
Okay.
always remember public sector, private sector, two different things. Private limited company, public limited company are always part of the private sector. Remember it because I ask this question every single class. Just ask Emily, she knows. I always ask this question every single class. Okay?
Okay. Okay.
So what happens in a shareholder value is that the business aims to what the business wants, the business aims to make their shareholders happy, okay? By when you make a profit, for instance, you in the year 2018, you made a profit of 85%, let's say. If you were looking for different kind of objective, maybe you would have left, you would have kept taken the profit. But when you want to increase your shareholder value and you want them to be happy, you give them higher returns. So you keep 15% and you give your 70% of profit to your shareholders or whatever
As
it is,
dividend, right?
as dividends, as returns, as a bonus dividend because you did so well. So when you want to increase your shareholder value as a business, you want, why do you think businesses want to increase shareholder value and give them more money? Why do you think they would want to do that?
So shareholders are happy with the owner.
Why do we want our shareholders to be happy?
Then they can use word of mouth and spread about the company, and more
And
people
what
will
happens
invest.
then?
And if they invest, more
Yes.
income comes in the company.
Yep. So we want more investors. Businesses always do this when they want more investors. They make their business look all amazing and profitable and attractive so that other people can invest. All right, do you both understand?
Yeah.
Yeah.
Okay, another type of objective is growth. Now, when a business, um we've studied business growth, remember, Emily, the different types of methods of growing a business: horizontal, vertical, conglomerate.
Yeah.
Yeah. Okay. Abbas, do you know what the different types of growth are?
No.
Okay. I'll go over that with you later. Okay.
Okay.
But when a business wants to grow, this is basically expansion. You could grow by opening a new business branch. You could grow by expanding into an international market. You could grow by taking over or merging with another company, or with your competitor. It could be anything. You could grow by launching a new product. Okay.
Yeah.
So when businesses have growth objectives, they obviously need to invest money, right? So when obviously you need money for all these things, don't you?
Of course. Yeah.
Yeah. So what happens when your business objectives are growth? If you're making 85% of profit, you use your retained earnings. This is your retained earnings. Once you've paid all the tax, all the dividends, once you've paid off every thing that needs to be done, you
Yeah.
take your retained earnings. They're called retained earnings. Once you take your retained earnings, you invest back into the business so that it can help you grow. And you could also take bank loans and everything. Okay. All right. So business growth objectives are for businesses that are looking for further growth. Can a new startup business grow in this first year?
No.
So what happens that the business objectives can change. So a new startup business might start off with a survival objective, and in 3 years time it's making profit, so it wants to grow. It's opened 15 more branches of the restaurant. Now its objective is changed to profit maximization,
Can I
right?
ask you a question? Yeah.
Yeah, sure.
Would the break even be an aim or an objective?
Would the break even be what?
Would break even be an objective?
Break even can survival is break even basically.
Okay. Okay.
Businesses want to survive, right? If you sell below the target or the money you've invested, break even is basically the money you've invested and the money you're making to a center point, right?
Yeah.
No profit, no loss. That's break even, right? Right? Non-financial words, it's
Yeah.
called a survival. You want to survive, you make no profit, no loss. You just survive in the market. You stay in the market, you
Okay.
survive in the market. Got it?
Okay. Yeah.
Cool. So we've covered 4 objectives so far. Now, fifth objective here could be market share. Emily, do you remember what market share are? What a market share is? Do you remember what it is?
Not really, miss.
Okay. Do you know what market share is, Abbas?
Yeah.
What is it?
Basically, it's like the I don't know how to like how much
The value of the business in the market.
basically, yeah, how percentage of the like,
Right.
yeah, basically you know
How
what I mean.
much? Yes. Yeah, yeah. I definitely know what you mean. All right. So how much value do you have in the market as compared to your competitors? Let's have a look at this. Let's make a pie chart here. Okay. So let me just finish this off. Okay. Now have a look at this. You're a restaurant. Okay. So restaurant A has this much of your market. Let's say this is more like 35% of the market. Okay. business, this one has this much of the market. The circle is representing the market, the restaurant market in the entire country. There are, let's say, 100 restaurants in the country. Okay. And this entire circle is representing the restaurants in the country. Company A has 35% of the customers. The customers, 35% of the customers go to this business. Okay. Whenever they want to eat food, they go to company A. Whenever the other people are hungry, this is, let's say, this is a 10%. The 10% of the target customers, they go to this company. Okay. Then there's another group that goes to this company, which is 15% of the market. And then we have another group of customers that go to this side of the market. And let's say this is 25%. Who has more value or most of the customers? Who has most of the customers? A, right? Emily, do you agree?
It's a
Yes.
monopoly.
Yeah. So business A over here is the market leader. So whoever has more customers is the market leader. So market share is basically how much of the market do you own? Okay. Now business objectives could be to maximize or have be the market leader and to maximize market share. Why do you want to be a market leader? Because people trust market leaders. It gives you a brand image. You think of a phone, you think iPhone, right? Market leaders. It gives you a brand image. It makes your brand reliable. It makes it look like everybody trusts your brand, right? Because you are known. You think of fast food, you think McDonald's, right? So market share gives, if you want to maximize or you want to have be known, you want to maximize your market share, and that is your objective. Can a new startup business have a market share objective, maximize market share objective?
No.
No.
No. What do you say, Emily?
No, miss.
You can't, because you just entered the market. People are just trying to recognize who you are. So you can't really, become the market leader suddenly, right?
Yeah.
Okay. So these are the different types of business objectives. We've covered market share. There is a formula to calculate this market share. Let's do one. Okay. So the formula is the sales of the company, the total market sales multiplied by 100. Have a look at this. Grab a piece of paper. So the formula is sales of the company divided by market sales into 100. The answer is obviously going to be in a percentage. Calculate the market share of company A. Let's assume that these are not percentages, these are just number of sales. The 35 million, 10 million, 15 million, 25 million. Calculate the market share for company A. Can you do that?
Yeah.
Emily, can you do that or do you need help?
Yes, sir.
Okay, give it a shot and then we'll see.
Done. I finished.
Okay. Emily, are you done?
No, miss.
Okay. What is the answer that you got, Abbas?
41.1%.
40 what?
41.1%.
Okay.
Yes, I got the same.
Okay. Let's see how we did it. So we added up all these numbers: 10 plus 15 plus 25 plus 35. What number did it give us?
85.
85. So we have the market sales. Okay. So we have the denominator, which is 85. Which company are we pulling out the market share for?
A.
Company A. What is their sales?
35.
35. Multiply by 100, you get a 41.2%. Okay, we round off the 1 because 7, it was 41.17. So we rounded off, okay, and it's a 41.2% then. Okay, so this is how we put out the market share. Anything that either of you did not understand?
No.
Everything is clear? Can you please make this mind map in your notebooks?
So,
Let me know when you're
I'm done.
Okay, perfect.
Yes, I'm done.
Okay, perfect. All right, moving on. I'll just take 5 more minutes and finish this chapter and then let you guys go, okay? All right. So we're done with all the business objectives. We've got market share, growth, profit, returns to shareholders, and survival. Why stakeholders are okay, why business objectives should change? Like I just said, BlackBerry, Apple, blah blah. It changes. I was talking about it throughout. Um, the legal structure changes. You become a public or private limited company, so you start aiming towards, um, business objectives of shareholders, maximum increase your returns to shareholders, blah blah blah. So business objectives should change because of the changes in the external environment, and the market is dynamic. Okay. Also, it should change because they become outdated. Okay. It should also change because it can, make it boring for the employees as well. All right. So it can change based on different situations. All right. Um, this is your homework. Small firm. So you just have to identify what the business objectives are. We're going to do this in the first 5 minutes of tomorrow's class. Okay. We're going to do it orally. I want you to just write the different. Can you take a screenshot, Abbas?
Okay, one second.
Yeah, please take a screenshot, crop this photo, and share it in the group, and just write homework due tomorrow.
Is it from why business objectives could change?
Yes, which objectives for each business? So this is homework. What is the
Yeah,
date tomorrow?
I think it's
26th?
27.
Okay,
27.
27th. No, yeah, okay. So this is the homework for 27th or 123. Now you take a screenshot, please.
Uh, yeah, I sent it in the group already.
Okay, delete that and take this one.
Okay.
All right. Now, stakeholders are the people who are involved in your business. Do we know what stakeholders are, both of you?
Yeah.
Right? Government, employees, managers, owners, general public, banks, suppliers, customers, every single person who is connected to your business, who has a direct interest in your business activities, is your stakeholder. All right?
Oh,
We- We're clear with that, right?
Yeah.
Emily, are we clear with that?
yes, sir.
Now, there are different things that different stakeholders might want. For example, let's say your shareholders, what would they want from the business? What would a shareholder want from the business?
Dividend?
Dividends.
Okay, they want to have lots and lots and lots and high dividends, right? Right?
Yeah.
What about business owners? What do they want?
Money,
They want money.
sales,
So
revenue.
they want revenue, they want to grow their business, they want success. Second, I'm sorry, who is that? Let me just check. Okay. Business success. Okay. They want their business to grow. They want their business to be successful. So they want whatever money they want, whatever retained earnings they get, they want that money invested back in the business so that they can grow. Right? Right?
Yeah.
Yeah,
Yes. Are you both with me?
yeah.
Yeah.
So what about employees? What do they want?
Salary, good salary.
High salaries, good salaries. Do we see a conflict over here? These people want more dividends. So whatever profit you make, they're like, hey, give us those dividends. You're making a profit, you give us a return. Employees, they're like, you are growing, you're becoming a successful business. I should get a higher salary. I should get a promotion. I want to grow. I want the money you're making, I want a higher increment this year because you got such a huge profit or blah blah blah. Business owners, whatever profit they make and the return that they get, they're like, we don't want to spend that money anywhere. We'll take that money and we'll invest back in the business and we'll make the business grow and open new branches. Do we see a conflict?
Yeah.
All employees, owners, managers, customers, everybody wants different things. What about the government? The government want tax. You make more money, you give us more tax, right? So over here, you can see that everybody has their own objectives and they're likely to conflict with each other. This is called a stakeholder conflict. Okay, you guys get it?
Yeah.
Yeah.
So I want you to you can take a screenshot of us, and Emily, I want you to read the main features of how they're connected to the business and what their objectives are likely to be. Okay, so each stakeholder might have different objectives. Each stakeholder has a different role in each business and has their own objective, and each one of them can conflict with each other. That is called a stakeholder objective. Screenshot taken?
Yeah.
Okay. Obviously, a public sector organization that is owned by the government, they want to have three objectives: financial, service, social. They want to benefit the society, provide, make no money or enough money to just survive, but we don't want to make profit. We want to benefit the people in the society. We want to provide service to the community, and we want to provide, create employment, help people out, make businesses enough so that, it helps this is people in the society. And that is what your public sector objectives are going to be. All the objectives discussed above were objectives of a private sector. I hope that is clear. Okay.
Yeah, it's clear. Yeah.
Yes, conflict of a stakeholder objective. I just talked about this.
Yeah.
Yep, and that's it. I think we're done with the chapter. All right. Homework is given. Want both of you to do that. In tomorrow's class, we'll discuss that first and then we'll do the next chapter. All right. Any questions?
Okay.
No.
Any questions?
Yeah. What time is tomorrow's class?
Tomorrow it's at,
Okay. Well, next class.
next class is at 6.
Tomorrow.
Yes. Okay. Emily, I know you have an accounts class. I'm sorry for holding you back for so long. Any questions?
No, miss.
Okay.